Alright, so this is a quick little tutorial on how to use stochastic RSI and how I incorporate it in my strategy. So just a basic overview of stochastic RSI. All it really does is tell you when the market is oversold or overbought. Right here, you see it's oversold. Over here, we see it's overbought. And what that kind of tells us is that there's a chance that the market could reverse based on where it is right now in that moment. So we can see right here, it was oversold, and then, or sorry, overbought, and then it came down, sold off. And then from here, it was oversold, and then it went back up and became overbought. So it is a simple way to gauge when there is a potential reversal in the market. Now that's the monthly time frame. Let's go on a weekly time frame. You can see even more reversals potentially happening. Reversal right here was over. I always get this confused because they're so similar, but it was oversold, and then it was overbought, and then came down, oversold, overbought, came down again, oversold, overbought, came back up, oversold, overbought, came back up, and you can see it's a pattern that keeps repeating itself. My computer just froze. It's oversold, overbought, comes back down. So every time it hits these overbought or oversold levels, it tends to reverse. But the thing in trading is nothing is 100%. So you have to use this always as a confluence with something else, and you have to always combine it with some other tool and some other form of analysis so that you have a greater chance of being right. So whenever you analyze a chart, always make sure that if you're gonna enter a trade, that there's more than one confluence. There's supply and demand and stochastic and moving averages and trend line. The more confluences and methods of analysis that you combine, the greater the chance you're going to be right. So that's the simple overview of how to look at stochastic RSI. Okay, now let's go on a daily time frame. And you can see whenever it's in these overbought or oversold levels, it tends to reverse every time. And so if you combine that with another confluence like supply and demand or trend lines or moving averages, then it becomes a lot more useful and a lot more powerful and a lot more exact. All right, look at this. Combine supply and demand or support and resistance with this. Boom, I have a resistance level that got hit and it's overbought. So what does that tell me? There's a greater chance that it's going to reverse and come down. Look what happened. Sold it off. Same thing over here. Boom. Look what happened. Hit this level again. And it's overbought. Boom. What happened? It sold off. Okay. So that's one. That's another tip with stochastic RSI. How I tend to use it though when it comes to analysis is I tend to reserve it for entries. So let's say, okay, so let's say we're in the market and I'm looking for an entry and I see potential reversal and I'm trying to trade. Boom, we got a trend line right here on the 5-minute. You got a supply / resistance level right here. We have a stochastic overbought signal. And what I tend to do is go on a 3-minute and look what happened. Went up. Now I'm combining multiple confluences. I'm combining support or resistance and supply and a trend line break, counter trend line break, and stochastic overbought on the 3-minute. And let's say I'm trying to sell. So what would I do? Stop loss up here. Take profit down here somewhere. oversold, counter trend line break, support resistance, supply resistance zone rejection. Let it play out. Look what happens. Boom. Alright, so that's how I use stochastic and what it is and how to use it in your analysis and trading. In your analysis